37 minutes after the hour now. Investors are recovering from, let's call it a week of whiplash because of the coronavirus. Yesterday, stocks rebounded to their best day since 2008. That was a day after the worst day for stocks since the crash of 1987. The Dow rallied during the president's news conference declaring a national emergency. And the president, he was pleased, so pleased to get this. He sent a signed chart to supporters afterwards. Yesterday's 1,900-point jump caps off this week that also saw the end of an 11-year bull market and a move to a bear market. That's 20% off of a recent high. So which industries are taking the hit? Well, first you got airlines. Huge. Delta announced it's making deeper cuts than after the 9/11 attacks. Airline is reducing capacity by 40%, parking up to 300 of its planes. Delta CEO also urged employees to consider a voluntary leave in a bid to help save some cash for the company.
So I know you're sitting at home going, I don't know what this means for me. Between that, the government's response to all of this. Financial expert Ted Jenkins of Oxygen Financial is with us now. All right, I want your first take this morning when we're hearing about these airlines and these, potential deals that they want to give or, to their employees to say sayonara. I mean, this is frightening for people.
I mean, this is a real tug of war right now, Christy. You can't fight the virus and sort of flatten out this curve without damaging the economy at the same time. When people are quarantined and they have travel restrictions, you have sporting events that are canceling. And Apple, even today, one of the nation's largest retailers, said we are going to shut our doors for 2 weeks. So that's the immediate pullback. I think what we need to see over the next 2 to 3 months are layoffs, Christy. Will big companies, will small businesses start to lay off employees? Unemployment was at 3.5%. But I think we're going to see that rise pretty quickly here.
So how long might it take for the consumer pullback to do any lasting damage on the economy?
We're seeing the damage already, just what Victor just talked about Delta right now.
Right.
Think about this. Over the next month, they said that they have negative net bookings, Christy. What this means is that more people are canceling flights than are actually booking flights right now. You're seeing conferences cancel all around the country right now.
But we know, ideally and logically, we know that this is temporary, right? I mean, at some point, the swings got to come back up. The question is, how long might that last? Is that all dependent on what the government response is and the coronavirus and how it grows?
Yes, I mean, certainly there's a stopgap that was put in place. What the Fed did is they lowered interest rates by 0.5%, and they just infused about $1.5 trillion into the economy right now. So businesses have money to sustain themselves. But I think that we're going to see this stay for a while right now. It may be 6 to 9 months or 12 months before we see any recovery.
Which you wonder how that's going to affect a presidential election, obviously, coming up. Short term, coronavirus economy plan from the president. Is it feasible?
I mean, I don't know if it's feasible or not right now. We just saw there's some short-term lending right now, $50 billion for disaster relief. We're seeing that interest is going to be waived on loans right now for student loans. We're seeing some paid sick leave. But this is, I think, just the first measure. You're going to see maybe bailouts for the airlines. You're going to see more measures that are going to have to happen. I don't think we acted quick enough. And they talked about this whole payroll tax. That would really only affect people, I think, that are wealthy. A lot of the lower income families would not get any effect from that. It would probably cost somewhere in the nature of $800 billion, I think. So there's going to need to be more measures that are done right now to sustain the economy short term.
So people that are at home right now, say they have obviously a finite number of value of money in their bank account, or who depend on day-to-day work for themselves. What do you say to them?
Here's what I would say. Look, people have been going to the grocery store like crazy right now, Christy. They're buying peanut butter and bread. Right,
and toilet paper, which I've heard from so many of you. I know. Why are people buying toilet paper? But still, we're spending our money on things we think that we're going to need. But how long do you think this is going to go on?
I'm saying, why wouldn't people stock up on financial staples right now? Like, don't spend that bonus. Don't spend that tax return. Get an emergency reserve. Look, 25% of Americans could not make a $400 bill right now. So you've got to build a cash reserve while you can. Get the doctor's visits in. Get the dentist visits in while you're on quality health insurance from your corporation or you paid into it this year. Take care of those right now because that's the best financial move. Stock up right now. I wouldn't worry as much about the markets if you're a long-term investor. What I'd be worried about now is your personal economy, the short-term economy for you.
So there's 401ks, there's things that people are looking at right now. You're saying just pull back and let it ride out? they shouldn't move a lot of funds?
Well, right. If you need the money in a year or two, you have no business being in the stock market at all. But if you're 40 years old and you have 10, 20, 25 years to retirement, this is not something to panic about. These cycles have happened in 2008 and 2000. I would not panic.
All right. People are still panicking.
They're still panicking.
They're still panicking. And he knows it. I don't think this man has slept in 3 days.
Not in 3 days.
Oh, Ted, thank you for being here.
Thanks,
Always
Christine.
appreciate it.